Welcome everybody to the Extra Credit Show. I am Anselmo Moreno.
And I'm Richard David.
And we are back again with another podcast this week to help everybody master their credit score so that you guys can get the extra credit that you deserve. Richard, how are you doing?
I'm doing pretty well.
How was your weekend?
Oh, it was great. I was out at a wedding.
Where'd you go?
San Clemente.
San Clemente. Mm-hmm. San Clemente is probably the most beautiful city I've ever seen. That is an amazing city to be at. So very, very jelly that you were out there.
Yeah.
I spent the weekend resurfacing my pool. But enough of that. We wanted to jump right into our week's edition of the Extra Credit Show. A lot of the times I spend the mornings just kind of reading credit repair blogs or reading the CFPB blog. And this week they had an interesting blog. They titled it 3 Common Credit Issues and What You Can Do to Fix Them. I wanted to give our take on that and our spin on that because when I first mentioned it to you as a possible show topic, the 3 common things that they allegedly said was lack of enough credit history, 1, 2, denied credit application, and 3, fraud and identity theft. And your immediate reaction was those aren't 3 common problems. Explain that. Why do you say that?
Well, I mean, fraud and identity theft is the fastest growing crime in America, according to a lot of statistics. But when I look at credit reports, and remember, guys, all I do is look at bad credit reports all day long. Fraud and identity.
Sometimes you look at good ones.
Very, very rarely. If it's mine, maybe. Or after I'm done with my clients, then it looks good.
There you go.
But fraud and identity theft really is such a small percentage. I mean, I wouldn't even put it past 10%. That's not a very common credit problem. Also, getting denied credit. People do get denied credit, but most people that get denied credit are people with bad credit. And that's still, as bad as it may seem, a small percentage of the population, according to statistics and according to the credit bureaus. So again, it's not a common problem. What was the third one?
Lack of enough credit history.
Lack of enough credit history. I guess technically that could be a common problem since people are turning 18 all the time and they don't have credit. But it just seems like, I don't know, it doesn't seem like a very common problem for me.
And I think that,
sounds like lazy writing.
Well, a lot of it is subjective too. So, for example, like the denied credit, I see that as, well, that can have a lot of reasons. I mean, being denied credit, you could be denied credit because your credit is bad due to fraud or identity theft.
Sure.
You could be denied credit because you don't have enough, so you lack enough credit history.
Sure.
Or, self-imposed by having bad credit history. But let's just kind of break it down. Lack of enough credit history, it's not just brand new adults. It's not just people that have never began to build their credit.
Sure.
It could happen to someone who hasn't used their credit in 10 years, so they don't have anything as well.
And I do see that.
That could happen at any age. And we've had episodes on how to build or rebuild your credit history. But that is an interesting dynamic because that's probably on the surface one of the most common questions that we get by people that find out. When I meet somebody on the street or, at a business networking event, they ask, how do you build credit, or what is, my son just turned 18. What should I tell them on how to build credit? And that goes hand in hand with lack of enough credit history. But where I think it's subjective is, what is enough credit history? What exactly does that mean? When is it enough?
That is $1 million question. I know up till recently, even I was getting that little code on your score is graded such a way because of lack of credit history. And I'm like, no, I've had credit for the last 17 years consecutive, and I've had accounts open forever, 10 plus years. So according to what I see, you need to have an average age of at least 7 years on your open accounts in order to be considered not lacking credit history.
7 years.
Yes.
That's interesting. That is quite interesting. So if you're 20, 21, 22, 25, you may have a hard time meeting that criteria, especially if you consistently open up new accounts. So that's interesting. I feel in the magic formula that we give our clients when they're either on the rebound, trying to rebuild their credit history, or trying to establish credit history for the first time, I think that the first thing that we want to go and the first thing that we want to establish is 3 to 5 open accounts, open and active accounts, and that could be a mixture of a student loan, a credit card, a personal loan, and a car loan. Any mixture of those accounts, and we want to have them established for a minimum of 12 months. Right?
Yes.
Now that doesn't mean that that's enough credit history to meet that criteria, but it's enough to meet them to their initial goal, which most of the time is going to be to get qualified for a mortgage.
That's
so 12
correct.
months, 3 to 5 open accounts for 12 months, no lates. That's generally the first criteria that probably gets most consumers to a 640 credit score. It's not the best credit score in the world, but it's enough nowadays to get qualified for a mortgage. Very, very interesting. But even with that being done, and even that on the credit report, they're still going to technically have a lack of enough credit history on the report. And now what you mentioned was the little codes that show up.
Yes.
Now these codes show up on credit reports, and they're going to be reasons. It's interesting to break that down because they're going to have 4 codes on the credit score that are going to detail why you have that
The score you have.
But it's actually backwards. Everybody has those reasons. I've had people with 800 credit scores, and the scoring formula has to give out 4 reasons why they're not an 850 or why they're not a max score. So even someone with an 815 will generate reason codes as to why they don't have the perfect score.
Even an 849, guys.
And that's why you were getting, even with your credit score, you would get these codes of lack of enough credit history, because technically, I guess, you didn't meet the criteria to have an 850 yet because of the lack of credit history. It's kind of interesting how that works. Maybe it's a little
No matter how much history you have, you can always have more.
apparently. But that's it. That's kind of interesting. So they give out a little rundown on how to build credit, and like I said, 3 to 5 open active accounts, open for at least 12 months is going to be your golden ticket to going on the way to great credit. Well, let's talk about denied credit application. That's interesting. Nowadays, you can apply for credit on your smartphone at any moment in time, and you're going to be asked to apply for credit at every single store that you go to. They're going to have their own store-branded credit card, and they're going to incentivize you with some type of discount.
15% off this first-time purchase.
Right, certain amount of.
Don't get suckered in.
If you go to like Best Buy, Home Depot, they're going to give you 12 months no interest, so it entices you to go big on the purchase or maybe buy something that you wouldn't normally buy. But the point is you can apply on the spot.
Yes, you can.
And I think that a lot of people are getting denied more so than normal, because if we tie it back to the Equifax data breach, it brought fraud and identity theft to everybody's mind. Kind of before it was it was in the back of people's heads. They didn't really think about it, but this Equifax scandal brought it to the forefront. And what did a lot of people do? They put an initial fraud alert on their credit report.
Oh, yes.
Maybe they froze their credit file. They did something, right? Maybe they signed up for some type of credit monitoring. Regardless, if you have a fraud alert on your credit file, you're going to get denied, regardless of your credit score. You're going to get denied automatically on an initial application.
You're right. I didn't even consider that, actually. That is happening a lot right now. If you have a freeze on your credit report, you're getting denied, period.
That's the point of the freeze.
Yeah, that's the point of the freeze. And right now, what's becoming a common is that people that are trying to unfreeze their credit are unable to, especially with Experian, because Experian will send these consumers a letter giving them this PIN code to unfreeze their credit. And most of these consumers don't save that document. As soon as they get it, they just toss it. They try to unfreeze their credit. They don't have the PIN code, and it becomes a nightmare to unfreeze their credit.
Yeah, you definitely have to jump through significant more hoops to verify your identity to then be able to unfreeze your credit. But it's not just the credit freezes. If you have a fraud alert, it'll also get denied. Now, a fraud alert is very easy to put on. If you are a victim of a data breach, you get a fraud alert for an initial 90 days. And it's basically a big old alert on the credit report that when the creditor pulls it, it says that you may be a victim of identity theft and they need to verify your identity further. Now, if you're applying online or at a register, you're going to get denied on the spot, and then they're going to mail you something or possibly call you later to verify your identity and then potentially extend the credit to you.
That is correct.
But you still kind of have that embarrassing moment at the register. Like most people with bad credit don't apply for credit because they already know, if I apply for this, they're going to tell me, oh yeah, we're going to send you the credit decision in the mail. and that's automatic. Like you got denied. They're not sending you no credit decision that says yes. So you're going to get a letter in the mail. We call that the adverse action notice, and it basically is going to tell you who they looked at, so what credit bureau they looked at, what credit model they used, what your credit score was, and them detailing why they are not going to approve you for the credit application that you made. In some instances, if you have a fraud alert, potentially the letter in the mail could be send us a copy of your ID, and then maybe we can give you the credit line. That does happen, but the point is, there could be a lot of reasons why you're denied for credit at the point of sale. So it's not just because you have lack of enough credit history or because you have bad credit. In fact, someone that has really good credit and they apply for credit and they get denied, they probably get extra pissed if they get denied.
One of the reasons why that could happen is because they may not have income. Some places do require income
or enough income
in order to qualify for the loan that they're obtaining or they're attempting to obtain. Yes, not just because you have a good credit score is not you're not going to automatically get approved.
That's sometimes that's a very good point. On most credit applications, they're going to ask you for your income. Very rarely do they verify it, but if you just happen to not meet their income threshold, you can get denied even with the best credit score in the world. And we don't know that income threshold. There's no rule, there's no law that says, all right, this is the minimum income for all banks. No, the banks set their own guidelines. They set their own risk tolerance as far as income
well-kept
is concerned.
Secrets.
So very important to understand that it's not just credit score, it could be income. But what's another one that happens all the time? And a lot of people, and it's good, it's something to be very proud of, but a lot of self-employed people will put self-employed on the credit application.
Yes.
And that can sometimes also get an automatic denial because banks don't like to do business with self-employed people.
Being self-employed makes the guidelines for you to qualify or the threshold a lot stricter, a lot higher. It happens all the time, and it honestly, it can be quite annoying sometimes. But banks do it for a reason. Just because you're self-employed doesn't mean that your business is going to thrive, and banks have been burned a lot in the past. So they have a reason to impose these higher thresholds. But it can, again, as I said, get very annoying.
It's super frustrating. And you look at I always like to take a look at both sides. And if you look at it from the bank's perspective, it kind of makes sense. If you're self-employed and then you get injured, your money stops, right? So I guess it's potentially running a higher risk. So oftentimes what I advise my clients is don't just flat out tell them you're self-employed, tell them you're an employee of, and then your company name. You don't have to put it out there like that you're self-employed. Oftentimes if you are a corporation or an LLC, technically you are an employee of the corporation. They're not asking, are you, the CEO of the LLC? No, it's just simply, I'm an employee of this company and that's it. You don't have to put self-employed. I think that's actually the buzzword is do not put you're self-employed. That's the word. You can put manager, president, CEO, all that works except self-employed.
Most of the time when I see self-employed, it's from people whose credit isn't the best and they have a fear of putting down their place of employment. They don't want people knowing where they work. And it runs a lot in the Hispanic community, but it's not just a Hispanic community. A lot of people with, not necessarily terrible credit, but not good credit tend to do that a lot. I notice that's a habit of theirs. Because they're scared that, if something happens, they're going to come after their work since they now know where they work. It is what it is.
Yeah, definitely. Good points there. So the whole point is, if you're listening to the show, we've talked about how inquiries can affect your score. And technically, we really don't want you to be applying for credit all of the time, simply because it's not the inquiries that we're worried about. It's lowering the average age of your account if you do end up opening a new account. Mm-hmm. So hopefully you are not running across these problems. But who's that?
Hopefully it's the IRS, friends.
It's not.
Oh.
All right, back. But anyways, hopefully you're not running across these problems of applying for credit all of the time, because that definitely, it's not the inquiries that hurt, it's lowering the average age of your account.
So let's break it down for them. For example, if you have 3 credit cards right now that you've had open for 10 years because you opened them back when you were 18 or whatnot, your average age is 10 years. But if you have those same 3 credit cards and then you open 3 more credit cards, well, guess what? Now you have 10, 10, 10, 30, 0, 0, 0, 30 divided by 6. The average age just drops down to 5. Just like that, guys. And it brings you below that 7-year threshold. So if you don't need it, don't go applying for new credit just because.
Now, if you get denied for credit, I mentioned it earlier as to that they have to mail you the adverse action notice. There's actually a lot of rights that get triggered when you get denied for credit. And we want to make sure that you're aware of these rights so that you can exercise them and potentially reapply for the loan in the near future. So the very first thing that has to happen is that they have to provide you with the actual credit score that you generated. And that is going to tell you what credit scoring model that they use. If you've been listening to the show, you're familiar with all the credit scoring models that are out there. But they also got to give you the credit reporting agency that they use. So they're going to tell you, we looked at your TransUnion or we looked at your Equifax, and this is what they said about you. But also the contact information for that bureau. When you get denied, it triggers a free report for you. So technically you don't have to pay for a report. When you get denied, you have 60 days from when you get denied to get a free credit report from that credit bureau that the little letter says that they looked at. So now you're able to look at what the lender looked at in case you're not already looking at that bureau anyways. And they also have to tell you that if there's an error on this report, if you fix it, then they have to reconsider. They have to send that credit report back to the lender, the fixed credit report with the removal of the error for their reconsideration, all without a new inquiry and all done within a 60-day time frame. That's very interesting.
Have you ever seen that actually work?
I have not, actually. I don't think we've ever pushed the envelope that way, but it's technically allowable under the law.
Sure.
Have you?
I've never seen it done. I mean, there's certain things that you just, the law says one thing, but the practice is another. And I've never actually seen them reapprove someone because their credit score got corrected within those 60 days.
Yeah.
Almost like I've never seen the credit bureaus actually inform a consumer when they're reinserting an item. They just do it.
Yeah. I mean, that's, these are technically the rights that get triggered upon denial. And that's just the way that it works. I guess maybe if we try hard enough, if we have one of our clients, I think we can do it. We just never pressed it. If we have a client apply, they get denied, we correct something really quick and then press them to because there's probably a process that you have to go through to have them reconsider. I think we could do it. I think we're going to do it. I'm going to think about some clients that I think that potentially are good candidates for this. Because, we've never actually seen it done, but it's technically under the law. So there you go. And then fraud and identity theft. That's the other thing. I guess technically that's with the big data breaches that have been happening that are going to continue to happen. A lot of people are victims of identity theft actually the times that they find out is probably when they get denied for credit. They check their credit and realize, oh, someone's used my identity and hasn't paid the bills. I guess that's what makes sense, right?
I guess we're still too young into this process to find out, if the identity theft really has been increasing. We got to give it some time to do some more research. But as of right now, I still don't see that many cases.
Right. But the point is that I would say that people find out about identity theft when they apply for credit and get denied. That's probably the most common way that they find out about identity theft is they try to use their credit and then they get denied and they look at it and see, oh, I got denied for all this crap that's not mine.
Historically, that's been the case. You only find out when you realize there's something on my credit report that doesn't belong to me. And I only found out about that when I applied for credit. Nowadays, consumers who are using monitoring programs like Credit Karma and such, they get told when there's a new account that's been opened or when the new collection hits, and they're finding out that way.
Now, those are the proactive consumers that keep a tab on their credit report. I mean, that is the extra credit way, is to keep a tab on your credit report, because otherwise you're going to get a nasty surprise. You're going to have that embarrassing moment at the cash register where you get denied for the credit application, and they're going to tell you that they're going to mail you the credit decision in 7 to 10 days. That's a denial, hard denial, rejected, and nobody wants to go through that. A lot of people that I talk to are actually scared to apply for credit after experiencing that because it's pretty embarrassing.
That's one of the reasons why people don't have a credit history. They get so embarrassed, they stop using credit altogether.
And next thing you know, it's 10 years later and everything's gone. And they have a very thin file or no file.
They still come to you scared, like, my credit is bad. You know, it was so bad. I haven't used it in like 10 years. And then they realize, oh, wait a minute, I'm clean now.
Yeah. So, but, you know, this is just a quick little rundown as to what could potentially happen, or apparently the top 3 credit issues and what you can do to fix them. I don't think they're the top 3 credit issues.
I don't think so either.
But they're common enough that I think people will find value in the insight that we provided. At least that's what we're hoping.
What would you say are the top 3 credit issues if you had to say right now?
I think that the number 1 credit issue is credit card balances.
Okay.
So the number 1 problem for credit scores right now are the fact that people apply for credit with their credit card balances near the max or over 50%.
I actually would agree. What would be the next?
So the next would be unpaid collections.
Specifically medical.
Yeah.
Unpaid medical collections. We did a show on it not too long ago, a few weeks back. 25% of all collections are.
Wasn't it 52?
That's right.
It was 52%.
That's right.
had it backwards.
No, well, there was a 25% in there, but 52% are medical collections. Of all collections are medical collections.
Yeah.
That's an outrageous amount.
But people ignore them or choose not to pay them because they're under the premise that medical collections don't affect your score. They do. So
it's the culprit is, you know, and I work with a lot of lenders. I love you guys, but you know, we don't care about medical collections, which is technically true if the consumer had the score to qualify for the mortgage. Unfortunately, the medical collection affects the score, and you do care about the score. So yeah. They're just as important.
So credit card balance is huge. Probably number 1, definitely number 1, actually. Medical collections probably number 2. What do you think's number 3?
Number 3, late payments. A lot of consumers will pay 30 days late on a lot of different accounts, and they'll say, but I'm current with them. You know, we're fine. No, you're not fine. A single 30-day late on a credit report will make that account negative for 7 years.
Yeah.
Your score will auto-correct itself to a point after the account ages, but
if you get another late,
there you go. You're done.
Yeah. And it's actually breaking it down a little further on the late payments. I think it's ongoing late payments.
Exactly.
So, I mean, maybe you get 1 late payment a year. It's still terrible.
Absolutely.
You never reestablish an on-time payment history. You know, we want 12 clean months. We mentioned that earlier. We want to make sure you have 12 months in a row, no lates. Mm-hmm. So if you go 7 months in a row without a late, and then you get a late on month 8, then your 12 months starts over, and you never actually start to build a long-term clean credit history. Guys, people with an 800 credit score, they have 7 years with no lates or more. So if someone with an 800 credit score gets a late, they're no longer in the 800 credit score territory.
I just had an old client of mine, and this was just yesterday. Just yesterday, I got a call from an old client of mine saying, hey, you know what? My score doesn't keep going up. Every time it goes up 15, 20 points, it drops back down, and I have no idea what's going on. We did an investigation, and one of his creditors is migrating the 30-day late payment to move to a more recent late than it should be. For about 7-8 months, it's been migrating. So instead of being a 2016 30-day late payment, it's now midway through 2017 30-day late payment. Just to show you that your score keeps getting hurt the more recent the 30-day late payment is. His score will not go up because of it. So that's how important a single 30-day late payment is.
Now, that's an error at the creditor.
Yes.
And that's actually rare. What's most common is an actual real late. The client actually paid late.
Sure.
And that is kryptonite for credit scores, guys. You do not want to be paying late. You do not want to be applying for credit when your balances are high. And you do not want to ignore collections on the credit report, whether they're medical or not.
No.
You know, it's just impressive how consumers will be concerned with their credit score, but unwilling to address the collections. And so obviously, you know, our role as consultants is to bring them back down to reality, show them exactly what's affecting their score, and the right way to address these things.
I would say the collections were actually one of the biggest parts on cleaning up your credit report, because unlike banks, creditors, or finance companies, that history you can't remove. That history, you can partially correct, but it'll stay on there, such as the 30-day late payments. Collections, on the other hand, a lot of them can be removed entirely from the credit report.
Yeah.
And so in essence, in that case, they're a bigger part of your history.
And it's just trying to clean up. When you're doing the credit repair game, it's just trying to clean up as many things as possible. But yeah, that's our take on the most common. And I think based on our perspective and what we do day to day, which is, we're credit consultants. We help people master their credit scores, not just on the show, but in real life. That's what we see. That question that you said, what are your top 3? That wasn't planned. That's actually, we came up with it on the fly. But those are it. I mean, it's easy to come up with that stuff when you practice this every single day.
Well, yeah, that's what you see.
So, but that's about it for today's show. Richard, you got something else?
No, I believe we're good for today. Just keep watching us, keep sharing the show. And if you have any questions, forward it to us at the Extra Credit Show.
Yeah, the extracreditshow@gmail.com. Taking all questions. Would be happy to answer them on the show. Make sure you follow us on Instagram at the Extra Credit Show, and follow us on Facebook as well at the Extra Credit Show. Guys, I am Anselmo Moreno.
I'm Richard David.
We'll see you guys next time.